Hey everyone, my name's Andy from the Finding Value channel. We've got Scott with us from Sow and Reap Capital. Thanks for coming back on, Scott. Really appreciate it. Wanted you to come back on because I'm starting to see some progress in uranium that looks positive. I know when I was scrolling through your Twitter feed, I saw you had the Camco. I call it the turtle head. It's poking out, breaking out of the trend line. So, what are you seeing with some of the uranium stocks right now? What is it,
I
positive,
mean,
negative?
I think it's looking good. I mean, but I
Good.
always think it looks good. Starting with U.UN though, I think that's probably the most important chart right now. Even other than Chemico. So I know everyone was calling for like a head and shoulder pattern here. Maybe it is, maybe it isn't. I don't know yet, but I think this is a pretty clean chart. So you've got lots of touch points, clear uptrend here. You can probably draw a line this way, something like that. And so right now we're right at support. We bounced off support and we're looking pretty strong. Like these are pretty good looking weekly candlesticks, aren't they, Andy?
Actually, yes, they look very strong, and they're ending right at the close. They're closing where they are at their top, which is really strong.
Yes. So it's looking really
It's a
strong.
feast.
Looking really strong. So yeah, I'm really liking the look of U.UN right now, in terms of charting. And so this could be just be the failed head and shoulder pattern because there are so many charts in a bull market where it looks exactly like, I mean, we did a video right earlier
Mm-hmm.
on where we talked about the fake head and shoulder patterns, and this is exactly what it looks like. So you've got a huge down day like this. Everyone thinks it's gonna drop out, fall out. But it reverses and does a slingshot type of move up. And so it fakes a lot of people out when the head and shoulder pattern is this clear in a bull market. And so you've got U.UN, you've got YCA, yellow cake right now, which is looking pretty similar. And it's got even clearer. I think these touch points are amazing. I don't know how clean. I mean, it's very hard to find a chart that looks as clean as this in terms of touch points. Like it's just right on the line every single time, right on the line, bang, 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 and now it's looking pretty good. And so tomorrow, after U.UN's performance today, Spot's performance, it should probably go a little bit higher, hopefully, when the market's open for the London Stock Exchange tomorrow. And we've got CAP and Zatomprom looking pretty good as well.
Man,
So we've got this
looking at the
squeeze.
cap.
Yes, looking at the cap. So this is looking pretty good to me as well. And if I delete this, I mean, this pattern here, I mean, doesn't this look good, right? So you've got a strong leg up and it's basically being in a consolidation period right here. So you've got strong leg up and it's just consolidating. So, you
Mm-hmm.
know, usually when you consolidate sideways like this, it does follow through with a preceding trend, which should be up, hopefully. So yeah,
Yeah, I
I
mean,
like the look of all the
I was
major uranium charts.
I like how you said hopefully it goes up. It's
Yes, and yeah, with Chemico yesterday we did a little turtleneck up, as you commented, Andy. So I think
turtle
this is
head.
looking pretty. Yep. And if I put this on a 2 hourly chart, so it looks like we popped above. So you can see here it's three touch points. So one, two, three. When I look at these patterns, I like to see at least three touch points because that
Mm-hmm.
gives me a confirmation that it's some type of pattern. And so we had the three touch points, and so it grinded along this, but then we broke above, and it looks like we're doing another little tiny bull flag. So if I put it on, I don't want to go down to these fine charts, but just to show you what I'm talking about. You've got this strong looking candlestick up here, and you've got like some kind of a bull flag. And for those of you who aren't aware what a bull flag is, I can show you right now. So this is bull flag. So you've got a pole and a flag, and then it continues usually in the same direction. It looks like this, bull flag.
Yep.
So that's what it's looking like to me on the CCJ chart. So mostly, I think a lot of the uranium charts are looking very good, and a lot of charts are sitting. I mean, the craziest thing, Andy. Actually, I was going to do a video on this on my channel, but I might as well just talk about it now. So there are so many commodities chart that are actually, I don't have it open with me. So many commodities chart that are sitting right on 200 weekly moving average right now. And so that is, I think, bullish generally for the markets. So if I look at even something like 10, I know you talk about this on your channel and in charts. So if this is the chart of this is a chart of the solar ETF. So if you look at this, you've got huge breakout. So this is the 200 weekly moving average here. We've got a huge breakout coming down to retest, right? And I think I've made a list, but I've lost it now. But there are so many charts right now that are coming right down to the 200 weekly in the commodity space anyway, that are coming down to the 200 weekly moving average and grinding around it, which to me looks really bullish. Hold on, I think copper had it as well. Copper is bouncing nicely off it. You've got gold that is bouncing off the 200 weekly moving average, and this is a slingshot pattern to me, in my eyes anyway. So you break below it, that's a fake out, washes everyone out, because everyone thinks, oh no, it's broken through the major support, and now it's doing a slingshot pattern. It doesn't necessarily mean it has to go straight up. So what you can see in a pattern like this, and I'm not calling for anything here, I'm just saying what is possible. I'm just talking about what is possible. I'll just show you. So you could see something like this. So come down to retest the 200 weekly moving average and then go up. So that's what I see quite a bit, which is why I just wanted to highlight that. Silver is doing the same.
I think that's highly possible.
Yes. So what I'm talking about in terms of the pattern is what you see here. So silver chart here, you've got a fake out here. This is when I really went heavy into silver back in 2000. That was my first experience in the commodities market. So you've got the fake out here, and you go up. It's a slingshot move up, and then you come down to retest the 200 weekly moving average a couple of times, and then you continue on. So if you look at oil as well, which is the king of all commodities, not in terms of the potential gains, should I say, because that is uranium.
You're sounding like me, Scott, the king of commodities, the master commodity here.
Yes. So you're seeing used oil. So oil also grind around the 200 weekly moving average, which is very supportive. But as you saw in the silver chart, what you can see potentially is you might be able to see a fake out below and then do a slingshot move up and then come down. So it might take time. What I'm trying to say is that it might take time.
I agree with that.
Yeah, I'm just so chilled right now these days. Yeah, the life has been good. But anyway, so you've got this key level going across used oil, right? So if I look at this chart here, what I see is a clear line going up, and this could be a little bit magnetic in the sense that it has so many bounce areas here, which means it becomes magnetic. So you've got this level
$65. That's what you
around that level, and that would be supportive. So you see all these like bunch of resistance and support around this area, like all along here, which to me looks like a magnetic level. So if it was to do a fake out, this could be like an area of support, another key support. But I don't know. I'm liking uranium charts a lot more than everything else right now. If I go back to Uri as well.
You're such a sellout, Scott. You're a sellout.
If I look at Uri chart, this looks beautiful right now, don't you think? It's just like it's a huge.
It looks great. It looks fantastic.
It does look good. So
there is some things. There is some things I'll talk about. Every once in a while you get this thing kind of coiled up. It might dip low and then go.
Yes.
So it'll fake everybody 100%. Out. And I think we're getting that on some of the oil charts right now, where we kind of dip down.
Oh yes.
We're dipping kind of that last washout before a move higher. It's possible.
Yes.
Doesn't mean I'm projecting that. What I'm saying is for investors that are looking, it's possible that you get a slingshot kind of dip washout move before it goes higher.
Yes. And I did a video on this on my channel where I did talk about the fake out, the potential for a fake out. Hold on. I don't remember which charts I was talking about, but
there's one right there on the.
yeah, I mean, there are always fake outs, you know,
Yeah,
there are
tons.
always going to be fake outs. It's just, it happens all the time. But the thing is, with the charts that I looked at least, so let's just go back to the Apple chart. Maybe it was this one. Maybe it wasn't. But I mean, look, I mean, Euro chart, I mean, I keep comparing this to Apple chart here, but it does look extremely similar to this. Like, to my eyes anyway. I don't know what you think, Andy, but I keep talking about this chart. Let me just do this for you, right?
Mm-hmm.
So let me overlay this Apple chart to the chart of URA, and I will show you the similarities. Okay, so here it is. So Euro chart, Apple chart. Look at that. Boom.
Mm-hmm.
So you've got 1, 2, 3 mini hump, 1, 2, 3 mini hump. And
Yep.
so are we here? You know, like, I mean, it just looks so similar to my eyes. So,
yep.
And this isn't, sorry, go ahead, Andy.
Well, what I was going to explain to everybody who's listening, what happens is in these movements, you get a move higher and then you get a consolidation period. And what we're doing is we're comparing consolidation periods from other stocks. And the consolidation periods are created by humans. We're looking at how the herd mentality basically trades and create these patterns. And that's why we keep trying to look and see what the patterns are doing, because the herd is basically lining this up for either a drawdown or a move higher. Generally, if you enter it from the bottom side up, you get a continuation pattern to the upside. That's generally what happens with these patterns. We've entered from the bottom side up into it, and we are very low in this move. Like, we are at the beginning stages of this move. And the worst, I'll just say this, the worst portion of the move is always the beginning, because it's great if you're invested, but it feels the worst because it grinds the most, it has the largest pullback, and it's the longest pullback, longest consolidation period of all of them. So I know a lot of people think, oh, it's just gonna go. In the beginning of the bull markets, they usually grind for a bit, and then they compress and get bigger as it goes further into the bull market. So,
yes, that's exactly what happens.
Are you worried at all about any of these recessions, like recessionary talk?
No,
and people? You're not. There's a lot of people
that
are worried about recessions right now.
Not worried a single bit.
I'm saying, like,
a single bit.
I'm saying it's
and
like
look, I mean,
too.
I think it's a combination of, first, my faith in Jesus. I think that's probably the biggest factor that helps, right? And so I don't really generally just get worried about anything. Second, I think there are so many things you can do to develop yourself outside the financial markets. So if you did fail in the financial markets, I mean, we should be proactively seeking out opportunities in our lives, just everywhere, like not just financial markets, whether it's your job, whether it's like starting a new business, or whatever it might be. I think you should be passionate and be proactive about anything and everything in your life. So, like, when financial markets become a little focused because you've got other bigger things going on in your life, like Jesus, like, you know, working hard at your current job or helping out with businesses or whatever it might be, you know, like you there's no time to worry about this stuff. There's no time. There's just no capacity to worry about anything. So hold on. So I'll just show you 2023 market forecast. All right, I'm gonna share my screen with you again.
Yep.
Okay, so I've just typed into YouTube 2023 market forecast. Every single one is talking about a collapse, right? So collapse, housing market forecast, collapse. Markets will retest lows in 2023. Details, hold on. So there are just all these bearish projections. It won't end well. You know, like every single YouTube, when you just type in when you become a generalist and you just type in 2023 market forecast or whatever the forecast might be around, pretty much everything is bearish. I don't know. Like, to me, this is not time to get bearish because I think you've got to zag when everyone's zigging and zig when everyone's zagging. So I'm not worried right now. I mean, when delinquencies rates picks up, that's when I will get worried. Right now, I'm not worried at all. And you know, like, market's doing its thing. It's just consolidating beautifully around the 200 weekly moving average, just as you would expect to see. Like, and look, I mean, some markets do go up a lot quicker. So sometimes the bounce is only like a 1 or 2 bounce off the 200 weekly moving average, and then it shoots, you know, higher. And I can show you examples of this. And so this is why you can't really time it perfectly, right? So, and sometimes it never retests the 200 weekly moving average. Sometimes it only retests the 200 daily moving average. So you can't really exactly time this stuff, but I will, because Apple chart is such a clean chart. And also a lot of other charts are, but I'll just show you Apple chart, for example. So as you can see, it all reacts differently. So you've had 2 bounces here, like one mini hump here before it went up. Actually, that looks pretty similar to the oil chart right now.
Mm-hmm.
That does look similar, right? Let me just
Yeah, you get the 2 humps because that's the lead-in pattern. That's like what I always see in pullbacks. Is you get this pullback. It's 3 humps, the pullback, and then you get another little mini one that's a lead-in pattern.
Yeah.
And it can happen under a breakout or past the breakout. It's hard to say where it exactly will happen.
Yep.
And we're gonna put that second little mini hump in it. That's what we're gonna do on oil here, probably.
Yeah, look at that. That looks similar. Oh, look.
Yeah.
Doesn't that look similar? Oh my goodness.
They're
So
all
even
like that.
even that little
It's a
peak
double
there.
top. Yep.
Yes. And then you go down, and it's like a pretty orderly downward movement. And then, yeah, we could be like somewhere around this region here. So, you know, like, I mean, usually, so when we talk about the fake outs and stuff like that, it happens a lot less for me, you know, or from what I've seen at least, a lot less than, you know, a genuine good bounce off straight off the 200 weekly moving average. So the fake out doesn't happen as often as you would think. So even Apple right now is approaching 200 weekly moving average, which is supportive. So, you know, to get really bearish the markets, I don't know. So yeah, getting back to why you can't really predict the timing. As you can see, it didn't grind for that long. It just 2 bounces and then quickly upward, went on an upward movement. This time it bounced quite a bit and then went on. This time it only bounced once. So what I'm trying to say here is you can't predict, but you can know the possibilities and not panic about anything in the market. So right now, I know we're getting very, very close to the squeeze pattern, and that's why I'm just excited. I'm just sitting down waiting. Yep.
For Apple, what does it look like in 2009, 10? Because that's right when it bottomed, was somewhere in that range, and 2000, I think 9 probably, and that's where it consolidated and then took off. So I think
this looks really. I mean, this still continues to look very similar to natural gas chart for me.
Yep.
This looks really similar. So I know we've drawn the chart differently for natural gas, but what I've just noticed here is you've done this fake out. So this was the major trend.
Yep.
You can see the major trend here, and then so it touched 3 times, 1, 2, 3 here, and then it pierced below this, which is what's happening to natural gas now. I just saw the other thing.
That's the accumulation cylinder. Livermore accumulation cylinder of the entire thing there. If you do it.
So it's down here, which is what's happened to Apple. But you have this like very similar looking pattern here. Well, hold on, let me just pull it up again. So there are similarities everywhere, right? And that's why you just can't predict. It's very hard to know exactly what pattern it will kind of form before it all plays out. But let me just get rid of the 200. Okay, let me just copy this in for you because that looks really similar. Okay. So I've copied this and let's go back to natural gas. Okay. Are you ready, Andy?
Oh, I'm ready.
Look at that. Tell me that doesn't look similar. It's like exactly the same.
Yeah. And then it goes a little bit below. It fakes
Look
everybody
at
out.
that.
Everybody gets all bearish on
Look at
it.
that.
And then I know it's the same pattern. It's
Oh
the
my
same,
goodness, it looks
it's the
so
same
similar.
pattern.
That is so similar. Look at that. 1, 2, 3 touch points here. 1, 2, 3 touch points. Goes up, does this pattern here, which is exactly the same. Then comes down, fakes everyone out here, and then boom. So if we were to repeat Apple's pattern, then we could probably do something like this. Boom. Okay.
So we've got Apple looking like natural gas looking like Apple, early in its stage, right before a gigantic bull market. So
Yes.
do you think there's anything that can stop this?
Not that I can see. Not that I can see. I mean, I think one thing about, okay, in reality, right? So this is what everyone, including myself, what I've learned from experience. When you have a bearish outlook on the markets, and it's the same for your life. If you have a bearish outlook on your life and in your markets, you're bound to lose money. Because if you just look at, take the long-term history of the markets, I mean, the long-term trend is clearly up. So if you look at the markets with the bearish bias, then it's much more likely that you will lose money than make money. And so I think with commodities, I mean, everyone's bearish right now. That's what gets you the views. Like on YouTube, like if I posted stuff like, if I started posting stuff like, oh, market's gonna crash, and I will give you 10 reasons why. I mean, I can find 10 reasons why it might crash, right? It's like you just look at concentrated data like savings rate. Oh, savings rate plummeted, market's gonna crash. Or the credit card loan went up, oh, market's gonna crash. Or consumer sentiment is low, market's gonna crash. So I can find all these reasons that are not really valid, and post stuff like that on YouTube, and I'll probably get more views, right? Because people like that type of news. People, and then look, I mean, in reality, don't want to offend anyone here, but in reality, people that are looking for views, hold on, who are looking for others' opinions, perhaps, could be less experienced, because obviously you want to start somewhere. It was like me when I first started. I mean, there wasn't YouTube available, but I subscribed to, I think I told you before, but I subscribed to like Peter Schiff's show, for example, right? I had paid subscription services to listen to his show because there was nothing like that on YouTube. So when you do things like that, you don't know exactly what data points to look for. And so people generally, these people that are looking for some type of information on YouTube are looking for someone that will tell them why they shouldn't be getting into the markets, because their friends have made money. It comes out of jealousy, I think. One thing
Envy.
is jealousy, envy, and jealousy. Yes, envy.
Envy.
Because like, you've heard of all your friends that make money, and you want to look for reasons why your friends are not going to make money and why they're going to fail. And so you naturally look for those things. And so if you look at the general population, one, they have little idea about the markets and little experience about the markets. And two, they probably don't have the capital or the wealth that they've generated over time. So, because if you're experienced, if you've been in the markets for a long time, you're probably quite wealthy. So a lot of your listeners, Andy, for example, I think they are much more experienced investors. And that's probably why you don't blow up like other YouTube channels that talk about crashes all the time, is because I think I mean, talking about crashes just makes you sound more intelligent, and it captures the fear. So, okay, another thing is this: human psychology, just generally talking about human psychology, we tend to concentrate more on fear, just as natural human beings, more on fear than greed. So if I give you an option of winning, so losing $100 isn't the same as winning $100, because losing $100 for most people is more painful than winning the joy of winning $100, right? So people tend to look for things that drive fear, and that's just based on human psychology. So let's say your normal thinking is, oh, I don't want to lose money. Well, people type in, I don't want to lose money, fear, 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 right? That's just human psychology, and that's what drives YouTube views. And I think that's why we're seeing 2023. If you type in 2023 market forecast in YouTube, most of the YouTube channels will talk about upcoming crash in 2023. But what data are you proposing that with? Because
Inverted
I
yield
can't
curve.
find it.
Inverted yield curve. That's what everyone uses this. Inverted yield curve, low savings rate. Home prices are starting to come down with high interest rates, and interest rates are starting to come back down a little bit. That's what everybody uses, I think.
Yep. Market sentiment, credit card loans, bunch of stuff. But I mean, we just went through that in our last video. So if you want to check out all the reasons why we don't think the market's going to crash, check that one out.
Yeah. All right. Well, do you have anything else that you want to share?
No, not at this stage. Just enjoy life. Concentrate on enjoying your life, because I mean, it's just so good. And one thing that you can absolutely do is, you know how people always talk about, oh, I don't want to, I'm worried, I don't want to worry, and things like that. But the only real way of not getting worried about anything is to think about something positive in your life, because you can't think negative things and positive things in the same hit. So the mistake most people make is they start worrying, and then they go, oh, I don't want to worry. I'm worried, but I don't want to worry. I don't want to worry. Let's stop worrying, right? That's not the right way to approach this. You've got to go, life is fantastic. So while you're saying to yourself, life is fantastic, life is great, life is joyful, I'm full of gratitude, you can't think about negative things while you're saying those things. So you have to, it's either you take the route of going all negative or all positive in life. So just maybe change your approach to, stop worrying by actually starting with positive thoughts.
All right. Well, I've got the kids here. They're all running around now. So how about we can edit there. And Scott, I really appreciate you coming on and sharing your opinions and thoughts. Obviously, I'm a big uranium bull just like you, so I pay attention to your charts. And guys, sign up to his Twitter @U_AG. Follow him and see what he's got to post, because when these things start to go and they start to break out, that's the first stage. It's like first things they break, they may pause a little bit, they might do a retest, and then they go. Then they go.
Man, we could be close.
We could be
close. I don't know.
I know we've said that before. And I think with the interest rates where they're at, this is where it blew up last time. Uranium was right at this exact moment where the rate started to stop rising and basically went sideways, and then uranium just went ballistic. That last bull market. So the market conditions are there. So now it's, what's it going to do? And we're going to find out here.
We're going to find out.
Yep, we're going to find out. So, all right, Scott, thanks for coming on. Guys, definitely reach out. Go check out his channel too. And we'll catch everyone later. Thank you, Scott.
Thanks, Andy. See you, everyone.